Hello and welcome to the crypto market review starting with Bitcoin. So right now we are looking at the BTC daily chart. Let's have a quick overview on where we are actually in the BTC chart right now. If you see on the daily time frame, last time when we were stuck in a trading range, that was BTC was performing a sideways price action was between the day of when Terra Luna crashed. We had the sideways price motion for quite a while, starting from 9th of May all the way to 11th of June. That was approximately a month long sideways motion. And if we are to exactly tell how much time we took to break down, that was approximately uh, a month and 2 days right now. Then last time we broke down forming a bear flag formation, and the bear flag formation was completed on the daily time frame. If we see how long the bear flag technically should have brought BTC down, that marks exactly the point where we have entered on 14th of June. Right now we are again seeing a bear flag formation in a larger time frame, but this time almost if we see from started from 12th or 13th of June, and right now we are still in the bear flag formation. But this time what BTC has done, BTC has not exactly broken down sharply exactly from the bear flag formation. If we see what would be the primary price expectation for the bear flag, right now we would roughly be calculating how much BTC can go down. It is marking at a price of 13,400. That's fairly reasonable. So we can extend this price range to 13,000, let's say $500 price range. That would be the BTC target for few months ahead of us, or worst case scenario BTC can go below this price range as well. That would be considered as a black swan event, such as any major economic event or a war breaks out in the world. So the primary expectation for me right now is that BTC should technically be testing the the ascending channel it broke down, which had this ascending line, which would right now be acting as a rejection point for BTC. If we see on the 4-hour chart, zoomed in a little bit, yes. So on 4-hour chart, what technically makes sense that BTC should test this as a resistance and reject sharply from it. But the market is showing a huge signal of weakness right now, as we have the least trading volume in the market right now, considering macroeconomic factors and the uncertainty regarding the interest rate hikes that are coming very soon. And the Federal Reserve chairman said that they are willing to take any action or any measure in order to counter the inflation. Although the inflation has started to tame down, but still he said until and unless we are seeing an inflation number near to 2 or 2.5, we are not going to stop or even pause the interest rates right now. So in the month of September, that would be a surprise if we see a bigger interest rate hikes and market could crash suddenly. And in that scenario, we'll definitely be seeing BTC not even testing this as resistance, and BTC would sharply fall from this all the way below to the target area right now. The target area right now, as told previously, is primarily from $16,600 to 13,500. BTC could find support or resistance in between these lines. That is where I start to dollar cost average into Bitcoin and major altcoins. Although if you are following me on Twitter, you might be knowing I have a heavy bag of LRC that is roughly 3% of my portfolio, and also I have dollar cost averaged into render. There are certain reasons why I have dollar cost averaged into LRC. LRC is a very good DEX and is very similar to centralized exchange, as we are having a lot of news such as countries like Canada, they have restricted users to buy cryptocurrencies other than BTC for over $30,000. It means in a year you cannot buy any other cryptocurrency other than BTC, Ethereum, or there were two other also, Litecoin or XRP. Apart from that, you cannot buy any cryptocurrency more than 30,000 Canadian dollars. So these things would force people to go towards decentralized exchange, and looping DYDX, these are one of the best decentralized exchange. There are other reasons for looping attraction is that we are seeing GameStop. You might have heard the story of GameStop, that shows that once showed that the hedge funds usually that takes money from the retail investors was very badly defeated by the retail investors. In the incident of GameStop, we saw the real power of retail traders and the unity that was shown on Reddit. So right now we are seeing GameStop partnering with Loopring to launch their NFTs, and I think they are still underway, and they are still in beta version right now. So that is also a major development for Loopring, as well as Loopring has a good PE ratio, as well as the project is self-sustaining, and unlike Anchor Protocol for Terra Luna, which was not self-sustaining and was giving red flags all the way that the 20% APR on USD they were offering was not sustainable, as there was lesser revenue generation compared to what the project was offering as an APR. So right now that is also an attractive thing for Loopring, that Loopring is generating a decent amount of profit from the model or the business model they have made, and other developments to come on Loopring. And for render is what I feel like the freelancing, and most of the work would be done work from home, as COVID introduced most of the companies work from home. And usually many people, since Ethereum would be switching from proof of work to proof of stake, then many people who were previously mining Ethereum would start to utilize their graphic cards for other means of earning, especially using cryptocurrencies. So Render provides an opportunity for people to allow other people use, especially artists, to use their graphics card for rendering purposes. So Render has a very good utility. Most of the time people need, especially artists or game developers, need heavy graphics cards to generate or render their outputs. Most of the time these are technical terms, you may be getting to the point where I am right now. So they definitely need graphics card, special purpose graphic cards. Sometimes they need gaming graphic cards, sometimes they need ray tracing graphic cards. So usually technically not many people would find it affordable to buy different graphic card for different purposes, so they can lend it. And Render is a project that provides opportunities to especially freelancers who are earning their bread through freelancing. So Render provides an opportunity to lend online graphics card and pay in Render tokens. So that is a big use case for Render. Also Render, if has to touch its previous all-time high, it would roughly be doing a 17 to 20x from its current market price. So that's a decent bet I am willing to take for Render right now, as well as the Loopring. The reasons were told already. Moving on towards the BTC dominance, as I discussed that market appears to be weak right now, and this is also being shown by the BTC dominance. If we see BTC dominance on 4-hour chart, it is trying to break down the last support level which we are seeing on the 4-hour chart. If we see on the daily chart, BTC dominance, this low was last time in January, when suddenly BTC dominance started to go parabolic and went all the way up to a dominance percentage of 48%. If you see, that is all the way up to 48% in the daily time frame, and we are approaching nearly that support level. If I'm supposed to mark that support level on the daily time frame, where we can see BTC can develop a strong footing, and that is eventually also coinciding with the Ethereum merge. Right now altcoins are taking a decent breath, while BTC remains bearish as well as weak right now. What I expect from the market is, as soon as the Ethereum's merge is completed successfully, we will see a very big crash in the price of Ethereum. That is my primary expectation. That is not a financial advice, obviously. For Ethereum, we are seeing right now Ethereum can be testing the previous strong resistance level of $1,700, which we saw the rejection last time. And eventually, if when Ethereum break the $1,700 to $1,900 barrier, it touched $2,000 level. That is also psychological resistance from where Ethereum rejected sharply, as well as we had the event of Jackson Hole, at which the Fed chairman Jerome speak about taming inflation and talking about they would be going to any measure in order to tame the inflation right now, which we'll be seeing in September. I think the September inflation rate hike would surprise many market makers right now, as well as that would be very bearish for overall cryptocurrency market. So moving on towards another factor that is crashing the market right now, that is dollar currency index. If we zoom out on the daily time frame, if you are watching updates from quite a while, then you might be noticing using Fibonacci retracement levels. We have proposed that dollar currency index should technically hit a level of 111 to 111.5, and that would mean further crash or weakness in the stock market as well as cryptocurrency market right now, which we are exactly seeing, especially in BTC. Although independent of Ethereum, since Ethereum has a very important event called the merge upcoming, that is holding the market right now. Although if there was no Ethereum merge event right now, we would have seen sudden crash in the market after Jackson Hole, which we did, but the extent of crash was not that much. What expectations would have been right now, should the market should have tested the previous low of June, that was for BTC around 17,500, but I think Ethereum's merge is holding the market right now, and as soon as the merge is completed, we will see a sudden crash in the market and the dollar currency index would continue to go up. I've also performed Elliott wave analysis on dollar currency index. The dollar currency index I think should at least take the level of 111, and that would be a decisive level. If the dollar currency index has a point where it can be rejected and starts to go down, then 111 or to 111.5 is the range where it can reject sharply and go down. If it crosses and closes the candle above it, then we have very less hope that dollar currency index would stop any time sooner before 118 to 120. So for dollar currency index, we are very close to decisive movement right now. Moving on towards the stock market, since it's Monday, so the stock market is live right now. Also using the Elliott wave analysis, what we can expect is that the NASDAQ would roughly be now having a impulsive wave to the upside, since we have A, B, C corrective wave right now, and this would be the D wave, and another wave which would bring us to the lows, or at least retest the lows, would be E here. So that is why I am expecting NASDAQ to further retest the lows once again, and similarly goes for BTC. When NASDAQ goes down, BTC would be going down. Right now NASDAQ is at its decent strong support, the strong support which bounced NASDAQ last time to a price of 334 points, and this is the range which I have marked from quite a while. It is around 296 to 291, and if NASDAQ did break down, then we can test previous lows as a result of wave C completion. The wave C is not completed here, it can go all the way down. What primary expectation would be, if it bounces off, then we could be going up, then once again going down. So overall, we have to visit once again the lows of 277 to 278 dollar range for NASDAQ. That is overall bearish scenario for cryptocurrency as well as stock market. Even the dollar currency index points for that. For Ethereum, I already discussed the major event, that is the merge ahead of us, and after that we'll be seeing most of the time the market reacts negatively to a positive news. The positive news, if the Ethereum merge is successfully completed, then we'll be seeing the crash in the market right now. If you like the update, please hit the like, share and subscribe to the channel. Thank you for watching. Bye bye.